What is your philosophy and how has your philosophy evolved over that time?
You may think cycles last for many years. Nowadays, cycles even get over in 6 months' time.
Fund manager's view, how important is it to have that valuation framework, to have that band and say, I'm going to do it now?
Because today, I think people have become smart. And with this handheld devices, you have all the data, all the information available. But you should have the.
I thought that this is going to be the risk, but something else completely turned out.
If something is continuously outperforming and at bigger numbers, maybe sometimes, in your head, you have to keep that.
How important do you feel is going back to the drawing board, seeing the.
When you say, if I bought a stock, say 1 year back, even if the stock is up 20-25% today, what went into it?
How do you put on a different hat every time?
Don't compare it with themes of businesses which you cannot buy because they are not farming.
Today I have with me a fund manager with 20 years of experience. He is the co-head of equities at DSP Mutual Fund. He is responsible for managing various strategies across diversified and thematic mutual funds. Sir, thank you so much for taking on the time and having this conversation with us on our podcast. So, you've been managing money through multiple cycles. What is your philosophy and how has your philosophy evolved over that time?
I think when you talk about cycles, right, and when you talk about my last 20 years of managing money and 25 years being in this market, right, one thing which works well is always understanding about the business, your behavior, and not getting swayed by price moves, right? So what's worked well for me is, I started my career as a commodity sector analyst, right? So I started my career by analyzing metal companies. Then it was sugar, auto, cement, right? So these are cyclical sectors, right? So here maybe the element of timing is much higher. When you move towards other sectors, so-called IT, pharma, FMCG, right? There it's longevity of business holds. You don't mind owning stocks for years. So you learn, with the business you are in, what kind of business are you investing in? You learn from there. So cycles have taught me one thing is no one will tell you it is a peak of the cycle. No one is going to tell you at the bottom of the cycle. Like questions come to us as fund managers, right? You never give us sell calls. So again, I mean, it could be the reason. Maybe we also don't know is it the peak, right? But for me, it is if you've made a certain amount of money in a certain period of time, which you think is good, take the risk off. So same thing I do with cycles. Whether you've gone right in it, if it made a lot of money, you got the call right. At times, book profits and keep on learning because things are so volatile these days. You may think cycles last for many years. Nowadays, cycles even get over in 6 months' time, right? So you have to be agile, need to keep reading about those sectors, what's happening globally also, because we have some connect with them domestically also, right? What's happening around us. So keep on reading and learning and try to, run the cycles.
A lot of retail is, doing DIY. They're doing it by themselves. They feel like it's very easy. But from a fund manager's view, how important is it to have that valuation framework, to have that band and say, I'm going to do it now? And do you think, for a retail investor, do you think that it's easy with the level of time that they spend?
So I think as a fund manager, to have an investment philosophy is very important. What you believe in. Once you have that, it is being tested. I think at least you're telling the world that this is what you are, this is how you believe in investing. Secondly, years down the line, you may realize, okay, I need to tweak my style, I need to tweak my framework. Don't be shying away from doing it, right? As a fund manager, it's my 24/7 job, reading annual reports, meeting companies, meeting distributors, analyzing companies, right? When valuation comes in, again, valuation lens is different for everyone, right? When you say if I'm buying a stock today, someone is selling it today also, right? But you have some benchmarks in your mind, right? What is the implied growth? What has been the trend, cash flows? And it's a combination of various things. It's not the valuation, we say one word very loosely. It's a combination
And
of business.
everybody's P's become so easy to
Yeah,
see. Everybody's
yeah. So it's
is
a,
seeing only P.
so it's a very loosely used word. It's got many things to it: business cycle, implied growth, what is the mode, competition coming up and down. So you need to take all that into account, before saying, okay, valuations is good or bad. As far as retail investors, yes, I understand. I've been hearing a lot. A lot of people do it yourself investing, right? As long as they know what they are doing in terms of reading about the businesses, being on top of every quarterly earnings, what the sector is doing, I am fine with it, right? But if you're doing a hearsay, I met XYZ, he told me to buy a stock and I bought it. That's where I would be worried about. Because today I think people have become smart. And with this handheld devices, you have all the data, all the information available. But you should have the capability to info it rightly. Just don't go by, okay, my friend bought this, so I'm buying it. That's where I would, caution them from.
But how do you see this, handled? So it makes it easier for you as well as a fund manager. So
It
how
doesn't.
it doesn't?
For me, it's a lot of noise.
Okay.
I'm getting different type of news from different sources, and so many of them. What do I do? What do I infer? So again, what I understand, what we believe, what my research process is telling, what my team is telling, what our research is telling, and that's more important for me, right? Now, if you just go by hearsay, what are you doing then? You don't need a Rohit Singhania for that, right? You have the same Twitter handles, you have the same television channels, you have everything the same to tell you and teach you, right? So yes, we hear them, we try to, but the end decision, you cannot say because I heard someone saying this, I heard someone doing this. I liked something. We did our own research, bottom up research. We did a whole round. Why are we buying it? And then do it. That's how I would
And
say.
this is a very, very good point, because what people see at the end of the day is only returns. And when they have to make a decision on the fund, they just look at the returns. But you spoke so well on group thinking and how working with a group and a bunch of analysts actually help you out. So, how does that entire process work? How do you spend your time managing the exposures in your fund and that of looking at new ideas?
See, I would not say group thinking, right? Because what I believe is, if today I'm talking about my investment team, my research team, I believe in them, right? That's why they are there in my team. So whatever work they are doing on the sector level, at least our belief is they understand, they are more hands-on than what I am. I'm looking at all the sectors. My analyst is maybe looking at one, two sectors. They're meeting more companies than maybe I am in that particular sector per se. So their understanding of that sector is much higher today than what I have maybe, right? So when I get inputs from them, when we discuss and debate, it's a more informed decision we are taking. It's not a group thinking. They are giving their views, we are debating, discussing, right? It may so happen, maybe we are thinking as three fund managers sitting with the same analyst. One may come up and say, okay, I like the idea. Other two may say no, right? But what is gone, what work is gone behind that idea? What discussions have happened? What data is, what risk we have looked at it? Because risk is also very important. We talk about business growth outlook. We never talk a lot about risk. Risk is as important as any other factor. So once we arrive at that conclusion, then we. So I don't think it's group decision or group thinking. It's more of a debate, discussion, and arriving at, okay, what it should be like. And then it's a fund manager's call whether you want to buy the stock or don't want to buy the stock.
Any learnings in terms of understanding of risk? Say, yes, I thought that this is going to be the risk, but something else completely turned out.
It always happens. So and I'll give you with this example, right? So I've always said I'm a very valuation conscious investor. I don't like overpaying. And what I have learned, I mean, you may not call it a risk, but as a learning, right? Ki when does a business do well, and then what is the derivative? Stock price is a derivative of it, right? When the business is continuing to do well quarter on quarter, year on year, exceeding your expectations, and you're comparing that business saying other business where the business performance or delivery is lower than what you're expecting, but you're just looking at the sheer valuation number, and as I said, valuation is very subjective and loosely used number, right? You have to pay cognizance to the business performance. If something is continuously outperforming and at bigger numbers, maybe sometimes in your head you have to keep that valuation context a little bit on the side and say, okay, this I'm sure about the longevity of the growth, so valuations are not taking the front seat. So this I learned in the calendar year 2018 2019 period, right? Where you had certain segments of the market really doing good in terms of business performance. But I just looked at their valuation and I said they are very expensive for me. I did not own a lot of them. So that I would say that's my learning in terms of risks, whether you're just focusing on one side and forgetting others, and you're focusing on very small parameters.
So do you think in those periods, now that 21, 22, 23 has come, as an investor, how important do you feel is going back to the drawing board, seeing the mistakes that you've done? How do you undo that particular mistake and what you need to practice right now?
So at DSP, I'll tell you, we have something which we call the reflection session for fund managers, right? We try to do it once in 6 months. And it's basically going back and saying what you did right, what you did wrong. It's always not what you did wrong, right?
But is it based on return? How do you then come up with
So I
that
tell you,
metric?
the idea metrics is when you say if I bought a stock, say 1 year back, even if the stock is up 20-25% today, what went into it? Can I use the same lens in my other decisions? Or what lens did I use? On the other side, something went wrong. What was I thinking at that point of time? Could I have thought something different? And if I made a silly mistake, how do I avoid the mistake, right? That's learning, right? So as in you may be a 1 year, 5 year, 20 year experienced person, you have to keep on learning. And what if you're doing any mistakes, I mean, take a note of them and see, how do you avoid it next time? Mind you, it's difficult,
It is.
but it helps a lot. So that's what when I say, learning and going back to history and experience.
So speaking of experience, you're managing multiple strategies, and some are on the sectoral thematic side and some are more on the diversified side. How do you put on a different hat every time?
So the hat is the same, whether you're managing a diversified strategy or a sectoral strategy. Your process of identifying businesses, stocks, valuing them is the same. In a thematic strategy, you're restricted to few sectors or themes that you can buy. So you have to find the best businesses in those themes, and then don't compare it with themes or businesses which you cannot buy because they are not forming a part of your strategy. So in that, whatever best you can find, that's one level. Second level on the top down is how do you see the theme going to pan out over the next 1, 2, 3 years? Is
So
it a,
always long term.
yeah, is it a fad? Ki this theme will do good for 6 months and it's gone, or history tells you it's a 6 month thing up and down, or if you're able to manage the cycles well, it gives you a long term good investor experience. So for me, managing diverse schemes and few being thematic, it doesn't make a difference to me because being in a thematic fund manager, if I get an idea, the theme is going to do good because of the business aligns, macros aligning, I can have the benefit of in my diversified funds by going overweight in them, and vice versa. So I don't think it's a hindrance or it's a difficulty, at least for us, to manage few schemes which are diversified and few which are thematic. It helps me.
No, in fact, we were discussing also down, how do you amp up that aggression level during phases where market seems to be extremely low? So how do you come up with those phases? Because one, you have this sentiment where flows are coming out of the market as well. So how do you manage that as a fund manager? Suddenly your market cracks, and how do you put that lens to say, now I want to push the gear and be very, very aggressive in terms of deployment?
So I would say the good part is we have seen cycles, right? We have seen ups and downs also, right? That's not the last 5 years where we have just seen one cycle. And again, in the beginning, when you say what's worked well for analyzing the business, not getting swayed away by stock price. So this is what when I tell advisors whom I speak to, right? If your investor is coming and telling you today that last 12 months I have not made any money, so I want to get out. That's the question you need to answer properly. Why did you put in money last 12 months back? What was the discussion you and I had? And what is the reason today for you doing something different? Same thing is with my analyst. So it's not happened and it's not going to happen also hopefully. So if say we bought a stock 1 year back and we had business reasons for them to buy. Today after 1 year, my analyst comes and tells me, so let's sell the stock. And I ask him or her the reason. I am told, last 12 months the stock price has been flat, nothing is happening. So let's, maybe we took a bad call. That'll be my biggest worry. Why? Because we bought the stock analyzing the business expectations, outlook. Here we are not talking about it anything after 12 months. We are just seeing the stock price and trying to make a different decision. So that's how it is. That's the answer for you.
Now, speaking of passive investments, today many investors feel that just buying a Nifty 50 or a Next 50 is okay. we will continuously keep parking money there, like what you have in 401k. It's just a vehicle. How do you see active fund management and the role of active fund managers in India?
See, I'm an active fund manager, so I will always talk about active, right? But being in DSP, we always believe what is right for the investor. So you have certain products and certain kind of investors where the risk profile is different, or you have so-called a smart beta products where maybe an active cannot emulate, or it's not just a run of a mill product, right? So I would say both will exist hand in hand. Active, as I see, at least for the next 10 years, and again, don't count that 10 as a 10 number, we can take it as a loose word as valuations. I think it's here to stay because we have businesses. It is our job as fund managers to identify trends much better and benefit our investors out of it. Be bold in our calls. Of course, keeping in mind the risk parameters and governance in mind. You can't just lead them away, but be on top of it, right? So I think for time being, it's going to coexist. I don't see a big shift over there. But yeah, there are various investors. They have various return expectations, various assumptions on cost, various assumptions on whom are they investing with. So it's going to
Do you
coexist.
also get these questions on expense ratio as a fund manager?
Not really. And when I get it, I tell them it's not my job. Talk to my salesperson sitting next to me, right? Yeah.
Because we do get these questions in terms
No,
of
not we
expense
don't.
ratio.
We don't get. Yeah. That's. I think that my CEO. I'm sure he must be getting a lot of it.
Okay. Speaking of calls, I won't ask you too many questions on where the market is headed, what the expectations are. But somewhere you would find some diamonds in the dust in terms of sectors that you like.
So again, it's our book is all open. Every month the fact sheet gets published. So if you see our portfolios, I think financials, healthcare are the two spaces where we are overweight. We are also overweight on certain part of the energy basket. So these are the three segments we feel should be doing good. But again, as I said, it's like a rolling ball. If things are changing in other spaces, we have to keep an eyes and ear open. But if you would ask me today, I would say these three segments we are over with and think they can do good for a longer period of time.
All right. Speaking to more personal things, what are your daily routines like? As a fund manager, I'm sure our audience really wants to know, how does a fund manager come up, manage so much
It's
money,
it's
take great
it's
decisions
it's
as well?
pretty boring because it doesn't change a lot, right? Monday to Friday. You get up, you go to the gym, you read your newspapers, you're in office. I'm in office by 8, 10, you know. You read your emails, you try to figure out what not to read because there are so many of them. You speak to your analyst about what are their thoughts. Has something new happened last day? You look at their portfolios. What then but previous day usually you decide if some new note has come out or some new research has come out which you want to read. Then you make sure you have you make some kind of a calendar. So I always think of making so in maybe if 25 working days in a month I have a calendar of 15 days only, not for the rest 10 days. But I try to do that. I want to read this note today. I want to speak to this analyst or this person today. I want to meet this company today, because it needs to get structured because as I said, there's so much of noise. Sometimes you may get lost. And mind you, even I get lost sometimes, okay, I'm supposed to do four things now. What am I supposed to do now? So if you calendarize it, right? So see, these are daily things, reading research reports, if at times, we have company calls, where it's a predetermined thing, read that. But one thing I would say is what helped me is, if you read papers, annual reports. So during the result season, when the fourth quarter is over, usually, and 2 months after that, companies come out with their annual reports. I think, and whether it's me or my colleague Vineet, when we go back to our experience and we see, I think what we have learned from reading annual reports, no one can teach you that because you have the same business person talking about what he spoke about last 5 years back, 10 years back, 7 years back today, right? So what learnings you get reading annual reports. So my thing is, whenever you speak to anyone like me or asking daily routine, I may say whatever, but reading papers, reading annual reports, reading some business notes, I think that's a must for everyone.
And are you using AI in anything?
So yes, we are. So we have a system which we call Ask the Right Questions. We are trying to develop in DSP for the last 3 4 years. It's in a good stage. We are trying to integrate AI also into it. How does it make a fund managers or research analyst life easy? thinking part is with us, but whatever we were doing physically in terms of calculations or input data can happen automatically. How can it make my analyst have more free time to think about businesses, right, than to just key in the data and say getting it from 100 places, right? So we are doing it. I would not say we are very much a step ahead, but we are every day we are improving and trying to learn. And for us, it's also right now, and I would say it's like it's like a project. Hope is whatever people talk about, the outcome it comes is going to be good, but it's learning and trying to develop. So we have a specialized person in our team who is driving it for us, right? We call him a AI specialist, So he's driving it because if you'll ask me to do it, I may have my own time constraint for managing funds, meeting clients, meeting companies, right?
But I mean, it's a great initiative to have someone to just do all the
Yeah,
work.
so we have that, and because what again, that's the bread butter for him, all right. He has to make sure we develop it. He helps us, takes inputs from us, and again in the end give it on the other side. So that's what we're working on.
And when you speak to your peers and the fraternity, do you see that this AI trend in helping
It is
fund managers is
happening.
coming up?
See, I don't know about helping fund managers in terms of pure decision making, but in terms of efficient use of time, I think it is helping. A lot of people are talking about it. How much are they doing? I would not know, but everyone is doing something or the other. I would say some sort.
In fact, you mentioned Vineet. We were able to meet and speak to Vineet sir last week. I'm hoping to
Okay.
get him also on
Yeah, he
the
told me. Yeah, he was there with you all. Yeah,
get him also on the podcast.
yeah.
So speaking on, how do you recharge then?
How do you?
How do you recharge?
How
How
do
do
I
you get
recharge?
clear up your mind to get more perspectives?
Uh, I watch a lot of shows on Amazon, Netflix, Apple TV over the weekends.
But that again becomes research.
No, that's not research. It's plain blank laughing at out, right? So like in Bachpan mein we used to talk about Govinda movies, right? I mean just watch it and forget it, laugh and come out, right? So I mean let's just how do you stay away, right? Uh, Luckily I have good set of friends, very old friends. They all stay close by. So we make it can be a weekday also, someone is early in office, we meet, and just talk about anything crap, but not about my business or your business, it just talk something about something else. So that helps a
So
lot.
strong relationships are.
Yeah, that's important, right? Or if you're just at home, so we stay with my parents, right? Just go home, half an hour just sitting with them, thinking about business or markets, right? You're just talking to them and what did you do the full day, how was their day? I think that's the recharge enough for me.
So for somebody in their 20s and their 30s, what would you say are three very important things that they should actually focus on to build a very strong foundation? It can be anything,
And you're
not only
asking from this from an investment point of view?
no life,
Wow. I don't think I'm.
or try to mix
I
it
don't think
with
I
investing.
have not. I don't think I've earned that. To answer, give them advice. But I think yeah, being grounded. If you're asking me, right, as a foundation, I think that's very important. And believing in what you believe. And if something is going wrong, trying to reevaluate, refurbish. I think that doesn't. It helps. As an investor, I think, or as a new investor, I think that we all here learn in schools and colleges compounding. I think it has got a very significant meaning, right? So my CEO always talks about time spent rather than how much So that compounding, you may have bounds of bad returns or whatever. You spend time and you're taking the right decision. That power of compounding is huge. So don't forget that. I would say as an investor, that would be my thing.
In
The
fact,
power.
my next question was going to be this one. For all our M2W viewers, what would be that one lesson that they should take so that they can build wealth through every cycle?
So I think one was time I've already told you, right? Compounding, don't forget that. Secondly, you had asked me about a lot of investors investing themselves in stocks. I don't mind if you're doing it, but if you're doing it, make sure you're having proper research. It's not hearsay, right? And like yourself, there are various lot of advisors who are doing a lot of good work. Take use of them, na? Why not? So yes, believe in the power of compounding. It's tremendous, I believe, and it's proven. It's not like my belief or your belief. Secondly, whatever you're doing, take an informed decision, either doing it yourself or if you have an advisor or a friend, make sure what is the background to it, or what is gone behind that advice, what kind of work has gone. You need to be aware of that. So for your investors, I think, or for anyone, investing into the markets on the retail side, it would be that power of compounding time, and to whatever decisions you're taking, why, what has gone behind it, don't forget that.
Sir, thank you so much for your time. We had a great interaction before this entire podcast and on this podcast as well. It was a pleasure to have you and start off our podcast. Thank you
Thank
so
you.
much.
Thank
Thank
you.
you.
All the best to you.